All right, we should be live, right? Are we live? We're live. Hopefully, we have no more glitches in the system like we did yesterday. I do apologize for that. I'm not sure whether it's because I had too many tabs opened and it just slowed the system down, or there was a problem with the service that I use not being able to keep up with, I guess, all the requests for people watching this live stream. One can dream, right? Okay, welcome back, investors, to Ticker Time News. I am Adam, and today, well, it's Thursday, right? Well, the stock market traded as if it had a nervous eye on Friday, and that's when the May Consumer Price Index report, or the CPI, will be released, offering fresh new insight on the inflation trade or trend, whichever way you want to look at that one, and also a newfound perspective on the meaning of monetary policy. Today in the market, hey, what is happening, my friend? I'm glad to see you here today. Okay, today in the market, there was a broad-based sell-off. And I want to look at this. I'm going to go to the SPY right quick. Yesterday, and I hope this wasn't a portion when the video was glitching out, but yesterday we put, it may have been the day before on the SPY, where we put this, let me take volume off here so we can see it a little bit better. We put this reward risk box up, right, to tell whether or not we had a favorable for the market going up, or was it favorable for the market to go down. And well, yeah, the market went down right into that red box because we put a probability that we had a little bit of possibility, or a small probability that the market could go up, but it was very limited, right? The market couldn't go up very high because it was limited. But the downside risk was, what is this, 4 times, 5, 6 times greater going down than going up. And of course, that's what we had in the market today. And if we go to the SPX and look at the same thing as it loads, there's that box. I added that box today. So this wasn't here yesterday. I added it today. For tomorrow, the upside potential is limited compared to the downside risk that we have. Now, this is a huge downside risk. I mean, we could go to a new all-time low for the year, which would be really low, although I don't think we would hit that low quite yet. Maybe the Fed being aggressive, and there are signs that the Fed is going to be aggressive. Right now, it is not looking good to open a position to go long on just about anything. Maybe over in energy, maybe. But even that's slowing down a little bit. Right now, the opportunities are all on shorting this market. That's the highest probability of where this market is headed next. Now, even though we do not talk about the market moving in any type of, oh, what's the word that I should use? I used it earlier this morning with my daughter. We should not be dealing with absolutes when talking about the market, because the market can, do crazy things sometimes and go completely against. We've seen that with a couple of earnings reports over this past earnings season, where the earnings report and guidance was good, but the stock still went down. So, yeah, the probability, though, is greater of a risk to the downside, and that's probably where we should be looking for any type of trade to be made. Now, with this broad-based selling today, it almost created an impression that the market participants are not expecting a very good CPI report. A technical analysis on this chart right here in front of you, which is the S&P 500 without volume being shown, and I'll take the other indicators away at the bottom. And just technical analysis alone says we're setting up for much lower lows. Now, all 11 S&P 500 sectors finished lower today, sporting losses that targeted from 1.5% down to being down 2.8%. And then we've got the volatility index. It jumped today over 9%. VIX. Oh, and I haven't mentioned this yet in today's episode. You can follow a home. You can follow. I always mix that up. Goodness gracious. I thought I was over this. You can follow along at home by clicking the link in the description for TradingView. You can sign up for a free account. That's where all the trading is done. Now, the volatility index has been, kind of quiet for a while, at least helping with the stock market, because the S&P 500 has basically just been moving sideways while the VIX has been pulling back. But we talked about this yesterday, that the VIX is getting close to this 200-day moving average. And although it's not perfect, as you can see, the VIX dips below that 200-day moving average almost every time it gets to it. However, the thing that I mentioned is that the moving average acts like a magnet that pulls price action towards that moving average. So that's what we were seeing with the VIX and the 200-day moving average. Didn't mean this was an absolute, that it would sink this low and bounce off of it, but the probability was there. Well, today, I thought today was just going to go sideways, but no. The market decided the White House says CPI doesn't look good. Let's get out and let's jump ship. Let's see here. How do you think CPI report is going to come out? If the CPI comes out better than expected, the market is going to rip. If CPI comes out better than expected, the market will rejoice. But I don't think the CPI report is going to be very good. Even looking at core CPI, which excludes energy and food, which are like the two things that have gone up the most. CPI, what the consumer is paying on everything, even if you take energy out of it, has gone up. Look at your grocery cart. You fill up that grocery cart with a week's worth of groceries. Maybe you won't fill it up if you don't have a family you're shopping for. If it's just yourself, what is that compared to last week? What is that compared to 1 month ago? When you buy 1 week's worth of food today, looking at that receipt, how does that compare to 1 month ago? For me, shopping for a family, that 1 month bill today versus a month ago is higher today than it was a month ago. And I can say that for many things. I'm not talking about fuel, because that is way higher than it was a month ago. So with all these prices being elevated, how can the CPI report actually be better than expected? That's my train of thought on thinking about the CPI report and how that consumer price index is going to flush out. I don't think it's going to be good. Now, it may be peaking. I can get on board with that idea that March, April, and now May, maybe we are peaking with inflation, and maybe we have reached peak inflation. But if inflation is going to plateau for a while and stay elevated, that's not helping the consumer either, because that means prices are elevated and their wages are not going up to meet the elevated price of everything due to inflation. So we really need to see inflation come down to start having a positive impact. Let's see. Are we focusing on month over month or year over year? The headline numbers will scream out year over year what it is. you want to focus more on month over month. How has that improved? Gotten worse? That's what really matters, because that's going to show you whether or not inflation has peaked, whether or not inflation has plateaued, or whether or not inflation is coming down. The year-over-year number, people get all hyped up about and overreact to it, but that number really, it doesn't matter. It's the month-over-month number that matters the most. So seeing what that is critical. And as a matter of fact, let's let me pull this up. All right. Let's see. Aren't the housing and auto markets softening? Is that yet to be seen, or are they less significant for CPI? Yes. Last report a month ago, autos were coming down some. Housing, I believe, has plateaued. It has, or not plateaued. I believe the housing market has peaked, and I believe the housing market is now going to start coming down. Looking at those mortgage applications and refinancing applications, those keep dropping week after week after week now. I think it's been 3 or 4 weeks in a row that they have dropped and come down. So if the applications aren't being put in, then, you know, who's buying a home? There are also home builders who are just pulling out of sites and just leaving them because they cannot say with certainty when a home will be completed and at what point, or maybe I should rephrase that to what's the final bill going to be so we know how much to charge for this home. I've seen so many homes over the past few months, brand new ones, go up in price. They're still being built, but the price is continually rising on those because supplies are being delayed. Workforce is tough, and cost of everything are just going through the roof. But I think we're starting to see a plateauing, a leveling off of all of this data, all of this price action. Let's see here. I'm pulling up the CPI report from last. Also, wood, etc., also down a bit, but I'm a chronic optimist. It's inexpensive. Yes, it is. Even though some commodities have come down in price, they're still elevated. Let's see here. So consumer price index for April. That's what I want to look at. So all items rose 0.3% in April. Shelter, food, airfare indexes all rise. Let's see here. What else? What else? So I guess we're looking for a 0.3%. And of course, the 8.3% year over year number, we want to see that lower. All items less food and energy increased 0.6% in April, up 6.2% over the year. All right, let me pull this up. Okay. Let me bring this over here. Hopefully this isn't making the screen get glitchy again. Okay, so consumer price index, this is for last month, May 11th. And we have May 11th, and this is for April 2022 pricing. So the consumer price index for all urban consumers, CPIu, increased 0.3% in April on a seasonally adjusted basis after rising 1.2% in March. So 0.3%. And over the past or the last 12 months, all items index increased 8.3%. That was the year-over-year headline number. So we want to be under that 8.3%. Increases in the indexes for shelter, food, airline fares, and new vehicles were the largest contributors to the seasonally adjusted. All items increased. The food index rose 0.9% month over month, as food at home index, let's see, let me back up. The food index rose 0.9% over the month, as the food at home index rose 1%. And then we have the energy index declined in April after rising in recent months. Yeah, that's definitely not going to go down this past month. The index for gasoline fell 6.1% over the month. Can you imagine that? What that's going to be this time with record high gas prices? Like almost, it seems like every other day we're hitting a new record high for gasoline. And of course, that fall in gasoline to 6.1% over the month, offsetting increases in the indexes for natural gas and electricity. And then the next line, the index for all items less food and energy rose 0.6% in April, following a 0.3% advance in March. So we want to be under last month's numbers. That will show month over month decline. And then, of course, going down a little bit, looking at the table here, we can see October 21, November, December, January, February, March, April to 22. Unadjusted 12-month ended April 2022. So this is where, all the way top right, this is where we get our 8.3% year-over-year number. And then the 0.3% here for the month-over-month number. So we want to be lower or on par with 0.3%. If we're over that, then we are back over inflation. Back over inflation settling. Because if we take February 0.8 and March 1.2, and then April really cooling off with the 0.3, oh man, are we going to be able to be under April? Think about your receipts over the past month. If you were out shopping for anything, your grocery receipt, how's that compared to last month? We might actually have ticked up a little bit. And that would be a bad sign if we ticked up. A bad sign specifically for the stock market if we ticked up higher. Maybe that's why at the end of the day, the volatility index for the VIX jumped over 9%. Maybe some people know something we don't know. Okay, let's keep rolling on this. So today in the market, let me get back on that. So you can see what we need to do better. We cannot be above April's price of this 0.3% right here. And I don't know that we're going to be able to come down to match that. I almost think that we're higher than that for May. What are your thoughts? Do you feel like this past month, the past month of May, prices have been elevated? If you just exclude, gasoline for a moment, because we know that has risen, because we know we've hit record highs almost every other day, it seems. How do you feel the past month has been with prices? Do you feel like what you've been paying has been higher, or has it been lower for certain things? Let me know in the comments what you guys have been experiencing. That's the best way for us as a group to figure out certain things, like, what could inflation be, by us just sharing what we've experienced. So let me know in the comments, seriously. If you think prices over the past month, think about it. If they've gone up a little bit or they've ticked down a little bit. I think personally they've ticked up a little bit. Okay. So hopping back over here to the market, where you're thinking about that for a moment, I'm going to keep rolling with this. I'll pop back over to the SPX for the S&P 500. Now, the major indices, they all closed at their lows. I'm going to go to the 5-minute chart here so we can see this. I'll turn volume back on so we have a clear indicator of the 2 days. You can see yesterday, which is here in the middle of your screen, we were unsure in the opening trade, and then we sold off a big time right midday, and then slowly sank for the rest. But today, it was almost like this morning all the way until, I'll say, about 1 o'clock to 1:30 p.m. Eastern time. The market wasn't sure where it wanted to go. Some of the information that we got from the bank overseas, it was okay, but then some of the better news came out a little bit later, because we really fell off in the afternoon. I mean, that's a pretty sharp decline in the afternoon. That arc just is like slowly curving, and then boom, it drops hard. This is how it was for most indices and most stocks. It was the afternoon session that was the hardest. They're having a cascaded effect going lower. Now, the S&P 500 was unable to maintain a positive posture above 4,100, which that was a critical level for the S&P 500. And 4,100 is on the screen here, the red shaded box. When you go up and meet that with the blue box, there's a blue line towards the bottom of the blue box. That's 4,100, okay? And you can see it was like a magnet drawing the market to it all day. Earlier this morning, we bounced off of 4,100. Then we used it as resistance later in the morning. But we were just held right there around 4,100 until selling interest picked up, and it slid under a noticeable support zone, and that was around 4070 to 4080. And that is just right about, there's a red line in this red box here. This red line is right at 4070. That was a very key area that if it was broken, it would show a sign that, this area encompassed last week's low, which is significant. So, what did I do here? Well, I sent out a note to Patreon members, to our investors over there, and here's what it said. The S&P 500 has broken to new lows for the session and has violated an important support zone in the 4070 to 4080 area. That area is consistent with last week's lows, but a violation here on a closing basis, okay? On a closing basis. Let me go back to the daily view here. Did we close below 4070 and 4080? Yes, we did. We closed at 4017. You can see that over here on the right in the larger numbers, all the way to the right. 4017. So then I continued, but a violation here on a closing basis sets up a potential retracement to the 4,000 level. as there is not much support below this area. That's significant. That's letting you know that since we broke this, now we're going to fall. Okay. And then I talked about the CPI report coming out tomorrow. And the second part that I had bolded here, late selling interest here fits the condition of a general buyer's strike, meaning buyers were sitting on the sideline and they were just watching all the sell orders come in and they were hands off doing nothing. That has been in place most of the day, just not a lot of interest in participating today on the long side, I mean jumping in and buying any of this selling in front of that CPI report, which the White House said yesterday should be, quote, elevated. If the White House is getting in front of this saying, well, CPI data, folks, it's going to be elevated, what's that going to mean exactly? I think that's going to mean that prices have gone up. Okay, so I'm in Cali, so everything has skyrocketed. Oh man, I do feel for you. I know California has got high prices for a lot of things. It will be interesting when companies report their next earnings report in a few months with these inflation costs. Yes, margins will be compressed over the next couple of quarters, and that's going to cause a growth concern with earnings. And that's going to happen over the next couple of quarters, the end of this year. And we've been saying this since the beginning of this year. Beginning, good. Consumer, strong. Middle, oh, it's going to be a wishy-washy, volatile time because the consumer is being weakened. End of the year, heck no. Consumer is going to be weak at that point. They're going to have no money to spend, no discretionary. That's going to put pressure on margins and earnings growth, and it's just not going to look good. New car inventory will destroy used inventory profits. I could see that. All right. So that's a good read right there. Let's keep going. The worst performing sector was the communication sector. And let's pull up our sectors here. Let's see here. Oh, if you guys want to watch sector by sector, you can use this and look at that, everything red. Let's see here. I want to, no, I don't want to import, export, clear. Where's the, let's see. Aha. Okay. Okay. All right. So if you want to use this watch list here, it's all the S&P 500 sectors. You can, and I'm going to put it in the link here of the live chat. Okay, you can just click on that. It'll take you directly to it. That way you can watch the sectors too, or you can add the sectors directly to a watch list on your own TradingView. Okay, so communication. Is that the second one? I still haven't got the order of these memorized yet. There we go. So communication services, it was hit the worst today. Now, it's got a low because it's been climbing much like everything else recently. Sideways move, decline. The low here is 184, 185. And look at the volume. See how the volume on this? Look at this. We can go back to April the 20th, and just put a trend line right over top of this volume. And you can see how volume has been slowing down. When we were back here hitting all-time highs, volume was really low at that time. Yeah, let me do a better job of making my brush out here. So right here on volume, this low matches up with this high. We are now at that same level of volume. That's interesting. No correlations there. Just looking at it as a potential. I find it interesting. And then we had information technology. It was down 2.7%. Financials down 2.6%. Those were the leaders as far as being down. Now, 8 of the 11 S&P 500 sectors, they declined at least 2.3%. So this was a big sell-off. It was a broad-based sell-off, and almost every sector got hurt. I mean, you can see over here on the right-hand side, all the different sectors here, all the way to the right, those red percentage numbers, that's how far down everything was. Look at that. 2.3, 2.6, 2.4, 2.7, 2.2, 2.7. Everything was down. Everything. The best performing sector, surprisingly, was consumer discretionary. It was down 1.96%. That's, I find it a little bit odd that consumer discretionary, where we have extra money to spend on things, was the sector that fared. Oh, actually, I take that back. 1.9. I didn't see that 1.5 there from consumer staples. That actually looks a little bit better because consumer staples, you got to buy what you need on a daily basis. Okay, so some will call today a de-risking trade. And that is particularly true, but it also had to do simply with not wanting to take on risk in front of the CPI report, which, like I said, the White House said yesterday should be, quote, elevated. What does that mean, White House? Give us a little more clarity on that. I think elevated means it's going to be higher than that 0.3% from April. I think that's what we can deduce from that quote. Now, to this point, the weakness wasn't so much about selling as it was about a lack of buying. That's what I believe here. I don't think this was a big rush to sell. I think it was a big rush to do nothing, hold back. At least that's what I did. I let my shorts run, SPXS. I let that run today. I didn't touch it, and I'm still in it. One thing interesting about this one is when you look at the chart, the technicals for this. Let's pull this back up some so we can see up 7% today. It tapped its 21-day moving average, and that's where it stopped. Just technically, that's interesting that it stops right there. Like I said, these moving averages, they act like magnets. So today was a good day on the short side of the market. And if CPI really is elevated, like the White House says it is, then tomorrow should also be a good day on the short side of the market. Now, trading volume today was not particularly heavy given the scope of today's losses. It was, and I've got the, let me pull it back up. Oh, where did the market internals go? There it is. So the market internals today, we've got a volume of 895,000 at the New York Stock Exchange. I'm sorry, million. 895 million shares traded today. The average at the New York Stock Exchange is 1 billion. So still, there was some volume there, and it was elevated. It was higher than yesterday, but we're about 120,000 or so, 120,000 trades shy of the average. Now, the NASDAQ volume was 5.3 billion, and the average is 5 billion. So the NASDAQ, it was actually heavier today. And let's pull up the NASDAQ. Let's see here. Where'd it go? There we go. Let's drop it down a little bit. Okay. So volume today was much heavier on the NASDAQ. Much heavier. And we've got this falling wedge that it broke out of. And now we've got our box here. Let me fix this a little bit. There we go. And now we've got our box here showing that there is a good significant downside risk in the NASDAQ compared to any potential gain that we could get if we had a surprise. The White House was just trying to mislead investors, making investors think that, oh, it's bad, and then it comes in and it's not as bad as what the White House says. That happens sometimes, you know, the whole political game that's played. But that aside, there is still more downside risk. Now, back to the volume thing, with the New York Stock Exchange being about 120,000 trades lower or short on its average, which wasn't the highest volume of the week, but it wasn't the lowest either. But it was still lacking some. Now, the general lack of buying interest, I believe, was evident in the market breadth, which favored declining stocks by nearly 5-to-1 margin at the New York Stock Exchange. And all week, NASDAQ, it's been about a 2-to-1 on red days. Today, it was a 3-to-1 margin at the NASDAQ. So NASDAQ, higher volume, but there was more selling compared to the New York Stock Exchange. Different types of companies in both of those. Just pointing that out. Now, with the fear of the CPI report looming over the market, participants also shied away from today's market after a policy directive from the European Central Bank, or the ECB. They made it clear that inflation is high, and high inflation, is a universal problem, and that most of the world's leading central banks are shifting to a hawkish-minded policy bias that will curtail growth. Bye-bye growth. Now, briefly, the ECB left its key interest rates unchanged today, which was different from central banks that came out and did their interest rate thing earlier this week, with most of them raising their rates, some more than expected. And I wondered, well, is that something that our Fed's going to do to us? Give us a rug pull and hike rates next week higher than the 50 basis points that they've told us they're going to do? Interesting. But in Europe, that unchanged rate signaled that it expects to raise its interest rate by 25 basis points in their next meeting in July, but not today. Okay, if inflation is high and it's a universal problem, why are you not raising rates today and you're waiting to do it a month later? Interesting. Now, they'll also do another rate hike, they said, in September. Okay, why are you waiting? That's my question. Why are you waiting? Now, that view was communicated along with a decision to end its net asset purchase program on July 1st. Just like our Fed has slowed down the purchases being made, taking money out of the market, Europe will do so starting July 1st. Here, it started on June 1st. Then they gave an updated projection for inflation. And I think this is what really wobbled the market. They think the annual inflation rate will be 6.8% in 2022. So we get to the end of 2022. Europe believes the inflation in Europe will be 6.8%. That's up from their prior view of 5.1%. So fully over a 1.7% gain. Why didn't they raise rates then? See, that question comes back to me even with this. And then in 2023, they believe inflation will be 3.5%. Now, their prior view was 2.1%. So again, a 1.4% swing to the upside. So Europe, why didn't you raise rates this month? Are you trying to protect from a recession? Anyways, this news effectively took the steam right out of the futures market this morning, which had been trading higher ahead of today's open. And then it set the tone for a risk-adverse day, along with reports that a distinct or come back to me, brain. Oh, yes, the news that I hate talking about. Shanghai. There were reports that in southwest Shanghai, they had lockdowns again for COVID testing, while entertainment venues in Beijing were shuttered due to COVID concerns. I know I talk about what's happening in China and COVID, and I don't like to, but it has an effect on our supply chains. That's the reason why. I have a video coming out later this evening about NIO and their earnings report, but it's also linked to what Tesla is doing in China. And it's interesting. I think Tesla is getting away with a whole lot more than Chinese-based companies like NIO, Li Auto, Xpeng are getting. But that's for a standalone video. I got that coming out. Okay, let's jump over to the 10-year US10Y for the 10-year. It settled the session up 2 basis points. Not a big move. Practically flat. It settled at 3.04%. But the 2-year, which is more sensitive to rate hikes, to the Fed's fund rate, well, that jumped 5 basis points. US02Y. Look at that. Steady incline. Going back, it was flat back here at the 27th of May. And then it started its acceleration higher. Let's move this box over here. I think it's going to come out of this box. It looks like the 2-year, it wants to go to 3%. Although it's running up against resistance, because if we zoom in on this green box here, and the whole reason this green box is here is to show you the support and resistance here. On May the 11th, the 2-year got to 2.85%. It closed today at 2.82%, and it's down just a little bit in after hours. But a high of 2.85%. And then on May the 4th, it got to 2.84%. That's the 2 highs. So today, yesterday's high, well, today's high, because it's already starting to count for tomorrow. So it's down a little bit for tomorrow. Today's high was 2.84. 2.84 on May the 4th also. So it tapped that same high. 2.85 is next. Can it tap it? If the Fed goes berserk, raising rates next week higher, doing a rug pull on us, could you say 3% on the 2-year? It is a possibility. Let me check in here on you guys. Is that why the market sold off later today? Because of what the White House said? I quit earlier trying to trade the chop. I don't think it was specifically about the White House, although, yes, the White House played into that. But that was not completely 100% what was pulling the market down. I really, really think it was just de-risking what was happening or what potentially could happen tomorrow. Sure, I think a lot of traders might see what the White House said as political speak. Let's say inflation is going to be bad, but then the number is going to come in lower than what the White House is projecting, making everyone take a sigh of relief. Even though it may be elevated, maybe it's not as elevated as the White House is saying it's going to be. It's always a possibility. But I don't think it was 100%. I think it was just pure investors de-risking, selling out, closing positions. Even, I think you have these traders with options in. The market's headed down. There were a lot of investors that I know that were doing options trading. They were neutral. They really hadn't made or lost anything. They were neutral, and they're like, we better close out these positions. That, I think, had a little bit more to do, and it was just a cascading effect. Once one started, then everybody started. All right, so the 2-year here, this 2.82%. Going back to May the 11th, when it hit 2.85%. That was the highest level since late 2018. So if we break that, then we're going back to how it was in late 2018. How was the market in 2018? All right, the US dollar, and I'm just bringing this up because there's a correlation to the US dollar. And let me go back to the SPX here. Recently, and let me see if I can't get, let's see here. Let's see. There it is. Can we use that one? Let's see what that looks like. All right. It's kind of tough to see. All right. My point about bringing up the dollar is that if we go back and look at the high that was reached after our snapback rally, right here, this peak, and then the dollar being coming down, the dollar has been going up in strength, right? The dollar's been getting stronger. The market was going down. And then the dollar was getting weaker right here in this point, right as we had our rally right here. I know it's hard to see with all this other stuff on here. Here. So now the dollar is going back up again. Stocks dropped today. And I'm thinking if the dollar continues on with its getting stronger, so if the US dollar index increases, I think that's going to be a bad sign, another red flag that the market's not in a good condition and coming down. Let me get these red lines off of here. And then let's take this off of here too. All right, there we go. Okay. Nope, that's not what I wanted. Okay, I'm almost done. I'm almost wrapped up with what I wanted to talk about. Okay. Okay, so the US dollar index, it increased 0.8% today. Now, because of what happened in Europe in the central bank there, the euro actually pivoted from a point of strength immediately after the ECB made its announcement, and it went to a point of weakness because the euro was getting a bit stronger, the dollar was weakening a bit, and now it's reversed. It's inverted, basically. So now the dollar is getting stronger, the market went down, and there is a correlation to the strength of the US dollar and the stock market. The stronger the dollar, the weaker the market. It's a little something that I've noticed this year in 2022. All right, crude. Let's look at oil right quick. You can go to US OIL to look at US crude oil. It's at $121 a barrel right this moment. Today, it was relatively flat. Relatively flat for today. As a matter of fact, it is down even more since the market closed. So it closed at $121.43, and it's now at $121.36, 35, 36 cents. So it's gone down some. That's a little better. Because remember, we had our bubble around here. The oil had broken above this resistance. It was trading flat. Yesterday, it took off. How much higher can this go? Right now, this is like a freight train going downhill. But, going uphill on the chart. But the point is, it's a freight train going downhill, meaning it's got the momentum behind it, pushing it down that hill, making it go faster and faster and faster and faster. It's got the momentum. So this is not something that you want to step in front of to short. Although I think there is a shorting opportunity coming up soon. If we just go back and look at this big peak, this big takeoff right here when the war started, if we get to that red line here, then I think we might have some shorting opportunities on oil, but not yet. It just has too much momentum. Okay, so oil kind of calm today, which is a good thing, right? All right, we had a jobless report. Initial jobless claims for the week ending June the 4th increased by 27,000 to 229,000. The consensus was 208,000. Now, while continuing claims, and then we have continuing claims, right? Ending May the 28th, they were unchanged, 1.3 million. I think the takeaway here from the employment numbers is that nothing major is happening. There's no red flags popping up just yet. The trend for initial and continuing claims, even though some companies are starting to signal a slowdown in hiring, claims are still close to historically low levels. So, until we start seeing cracks in these jobless numbers, then we can confirm that with what we know companies are doing. We know companies are starting to tighten up on hiring, slowing down on hiring. They're taking some of those open jobs off the market and not filling those positions. Companies are starting to do that. So until the jobless claim numbers start to reflect a little bit of pain happening, then we can confirm that with what we know companies are doing and match those up. And that'll be 2 data points that we can put together and talk about what's happening with a possible recession, right? Are we in one now? Is this quarter going to be contracting like Q1? Or did inflation potentially save Q2 from contracting? That's a neat little exercise. If you think about inflation and the GDP, could that have kept GDP higher? Maybe just high enough to not contract and have those 2 quarters in a row so we can say we're officially looking through our rearview mirror saying we're in a recession, even though we'd already been in it, right? Okay, looking ahead at tomorrow, May CPI report, along with the core CPI report. And the core CPI report excludes food and energy. That comes out at 8:30 a.m. Eastern tomorrow on Friday. That will be followed up by the preliminary University of Michigan Index of Consumer Sentiment for the month of June. That comes out at 10 a.m. And then we get the Treasury budget for May. That doesn't come out until 2 o'clock in the afternoon Eastern time. So the market will already have reacted before it gets to that. Now, this is just a note, a service announcement. I don't know what to call it. Investors on Patreon, just a heads up. We did share today our latest top 10 value stocks list. We have a new #1 leader on our top 10 value stocks list. So make sure you go check that out if you didn't see the notification already. It's an interesting one that we chose for the #1 spot. I'll give you a clue. It's a fintech. And no, it's not PayPal. But look at it, see what you think, and let me know in the comments over there what you think about the 10 value stocks that we chose for this moment in time. How do you think they stack up? Let me know in the comments over there on Patreon. Okay, if you would like to get this information, by the way, click the first link in the description, become a member, get instant access to all of our content to help you along your investor journey. Mouth is getting dry. We've been going for a while. All right, let's see here. Will you post something on Patreon tomorrow before market open? Yes. HP? No. It wasn't HP. But HP's been on the value list. As a matter of fact, let me look over here. And just so others are aware, HP ticker symbol is HPQ, just so you know. Let's see here. Oh, that just because I just saw it here, that same conference that Intel spilled the beans at, HP is at that same conference, and it runs from June 7th, and tomorrow's the last day. No, today was June the 9th. June 9th was the last day. So no crazy news from HP about projections. See that video that I put out about Intel and the semiconductor industry? I really think after digging into all of this, that the warning that Intel gave was more of a warning about Intel itself than the semiconductor as a industry as a whole. I really think that's what it was. But the market, again, remember, the market always overreacts. So I think the market took what Intel was saying and said, oh, semiconductor industry, whole thing. But I just don't think it was. Dave, never heard of the company you emailed. Yeah, it's an interesting one. It is an interesting one for sure. I occasionally see that company with prepaid, like prepaid credit cards. Like if I go to Walgreens and you're looking at the whole rack of gift cards that they have. Occasionally I'll see that company there with a prepaid card that you can buy. Tomorrow I'm letting my SPX run. That's my plan. SPXS, which is the direction daily S&P 500 bear 3X. My plan is to let this run, because if inflation data is hot, and see, my investment thesis says that the market is headed for a new low, meaning, and I'll go back over to the SPX to look at that right quick. That new low, and let's take volume out of here. Right here on May the 20th, that low was 38.10. So I think the market is, the S&P 500 has at least one more new low for the year in store. So 38.10 was the last low of the year, and it was on May the 20th. And just a perspective, where we closed today at 40.17, if we take this down to that bottom, it's a 5% drop. We dropped 2.8% today. So 2 more days like today, and we're potentially making a new low for the year. So it's really not that far away. Our rally wasn't that strong, and it didn't really take us that far from this point. And it's actually, in the scheme of things here on the chart, the bottom of this yellow box, right here, the bottom of this yellow box is that low that was hit on May the 20th. So I'm going to let my SPXS run tomorrow because we could have another day like today, maybe worse. The White House thinks it's going to be worse. But we definitely have more risk to going down than we do to go up. Let's see here. Also, is it dumb to take a huge position tomorrow? I wouldn't use the word dumb, but if you don't already have a position open, I would be cautious about starting a new one, okay? Here's what I would be looking for. Let me go a little bit deeper here. All right, so we got the 1 hour right here, okay? Being at 4017, 4,000 level is going to be a key level for tomorrow. On the SPY, what is that? 400 or 410? 400. So 400 is a key level here on the SPY, and let me just look here. Yeah, there are lots of reactions. It's really about 402. If we put a line going 402, there's reactions right here. Oh, come on. At 402, resistance right here at 402. Resistance at 402 right here. Then there was a little gap up and then a little gap down after breaking that. So 402 seems like the number that the SPY would need to hold. Otherwise, it's falling and it's probably not going to find any support until it breaks underneath 400. And then right here was a little bit of resistance around 400, but it's liable to keep on going until we get down to, say, 385, 384 on the SPY. All right, let's see. Let me make sure I didn't miss anything. All right. Thanks for the watch list link. You're welcome. Yes, I will be posting on Patreon tomorrow. I do believe I've mentioned that one. Never heard of it. Will you play SPY tomorrow? No, there's never any dumb questions. Never, ever any dumb questions. I forget you guys. I forget. Are you guys using options for SPY? Yes. If playing it, yes. I'm playing SPY for sure. I'm itching to YOLO, but IDK if I can get myself to do so. It's just, there's just so much choppy risk right now and uncertainty that, the market can be unrational, right? The best investors, and let me go to SPX. The best investors are realists, right? We understand. And then here, trading, this is the SPX, and we're looking at it at the SPXS. Let's just do this. All right, there's that ticker. That's where I'm at right now. I'm at the 1 hour, and on the 1 hour, you can see perfectly this thing stopped right at its 200-day, right? The last time, my gosh, when was the last time it stopped at its 200? We got to go back to April of this year, and it was a resistance point, right? And we go back any further, the beginning of this year, the 200, it acted as support all the way up or all the way down as the market was falling. And then you can see the snapback rally right here inverted. But now that it's here at that 200 tapping it, it's going to need some momentum to break above that. So on the 1 hour here, its momentum is kind of stalled. It hasn't rolled over yet on the RSI. MFI maybe is starting to roll over, but the RSI is not quite rolling over yet, but it's at the top of its local range. So it's going to need a little oomph to get going and get above that. And of course, going back to the daily view here of it, why do I have two of these now? All right, a daily view, it stopped right at its 21-day moving average. So when you're underneath that 21-day moving average, that's bearish. It's almost like the 50-day, except for here on the SPXS, it's above its 50-day. See right here? So this is, I would consider, a bullish setup. But on the daily, RSI is just starting to curl up, and it's at the bottom of its range. So on the daily, it looks set up for a nice run tomorrow. Again, inverted, because this is the bearish SPXS. But the money flow, that's starting to curl down just a little bit. Maybe the gas foot was taken off the gas pedal there at the end of the day. 5-minute view on this will give us a better indication. And really, no, this thing just put on the accelerator into the close. I was looking for any hesitation, like did it end on maybe a short red one? And here, man, it's just using that 21-day, hugging that thing. All right. Okay, so that's that. Let's see here. Let's see here. Okay, so itching for tomorrow to ride this thing. Now, I do think there's more downside potential. I do think the market's going for a new low of the year. And again, that's 30. The low is 38.10. That would be like another 100-point drop, which would be about 2.5%. But we measured here, it's about a 5% or so drop. Am I remembering that correctly? I think so. Close to the new low. Yep, right about 5%. So it could be done tomorrow. It surely could. Maybe it would be done tomorrow, would sink it halfway there. And then, maybe Monday is a little bounce back, maybe to this black line. And there's a lot of possibilities here. And this black line, again, is for like a head and shoulders pattern. So we get under this black line here, and tomorrow, I mean, it's real close to the 4,000 line. It's like 39.85, 39.86 area up to 4,000. It gets in that box and drops below it. It's falling harder. Only thing I fear is that the market does something stupid and does the opposite despite a good, bad CPI report. Yeah, that same thing here. Even though I'm confident in my thesis, the market's not acting rational. And, it's kind of, I think that's to be expected, quite frankly. When markets get overdone, when markets are in a downtrend, when people are losing money, they start to become less rational the more they're down. Which means the market can act in unnatural ways at times. But I feel confident if CPI is negative tomorrow, the sell-off today was just the beginning. Okay, and I'll make sure to post tomorrow about CPI. on Patreon. So if you want to make sure to get that data and what the market's doing tomorrow morning and throughout the day, just click the first link in the description. Come join us over there. We'd love to have you. Okay. I mean, that's really one of the best ways to help a small creator out here on YouTube. And, oh, just another little note. Over the weekend, I will set up Twitch and start live streaming there too. We'll see what happens, right? So that'll be interesting. Okay. Well, I guess we'll wrap it up for today. Any other questions? Otherwise, we'll wrap this stream up for today. I greatly appreciate you joining me today. Here every day, the market is open in the evening to talk about what happened, why it happened, and what to expect. So we can all be good investing citizens of this world and learn from each other. I'll look forward to your post tomorrow morning. Absolutely. Twitch is great because other people can host you with their viewers. Oh, really? I have a lot to learn about Twitch. That's for sure. Okay, cool. Well, anything else? Get a good night's sleep, and we'll be at it tomorrow for sure. Always an important day. And remember, next week, again, we're getting hit with this double whammy. Next Wednesday, Jerome Powell comes out and is either going to be hawkish or neutral. I don't think he's going to be dovish. He's either going to be neutral and stay the path, or he's going to be more hawkish, like all these other central banks this past week across Europe and elsewhere. All right. You are welcome. Thank you. Good night. And I'll see you guys in the next video. I greatly appreciate it again. Good night.